price of gold has come under pressure over the past couple of weeks or so, and along with that, we've seen Bitcoin also kind of consolidate further to the downside, however, remaining very constructive. The point I'm trying to make here today really quickly is that people don't lose sight of the fact that those two things are correlated in this environment. Let me show you two charts I think everyone should be aware of and see if they can apply those in their own trading and investing. Here's chart number one. This is just very simply the positive correlation between gold and Bitcoin. Bitcoin tends to be more volatile, and you can see both of them have broken out along this formation. And if we zoom in really closely, we can see that gold, which is in blue, has actually been underperforming more than Bitcoin. So if Bitcoin were to make a move higher, gold, whether that's the GLD ETF or gold futures or gold spot, should, all else being equal, continue to go higher. Another way of looking at that is just looking at the performance through the lens of I guess, percentage performance. We're looking at the year to date here, and you can see gold is actually having a great year. It's up 11-12%. Bitcoin, of course, being a lot more volatile, up 67%. So if Bitcoin were to break higher here, gold will likely go with it. And quite frankly, I would argue this relationship works vice versa as well. We'll find out. However, what I can tell you, what's also happening at the same time here is a lot of volatility underneath the surface. I've never seen a market over the past 25 years where we've had this much volatility underneath the surface, but such a calm equity market above the surface. And underneath the surface, there's so much stuff happening. Look at CRM. This is Salesforce.com after earnings the other day, and it completely fell apart. I believe it was down 20% on that day, a weekish ago, something like that, and basically then started bouncing from very sharply up like $20. There are tremendous opportunities in this environment. If you're getting tired by the S&P just kind of meandering sideways to higher, right? There is so much opportunity underneath the surface in single name stocks and ETFs where we can put on income trades using options credit spreads in a very specific way. I would love to show you how that works. I'll show you our algorithm, our Vertical X Pro. It's fine-tuned to find extreme oversold and extreme overbought readings, like in this case CRM, where it got extremely oversold, gave us an oversold signal, and then we put on a trade to take advantage of that oversold situation. Make sure you sign up for that strategy session this week in the next on the next screen here or at the bottom, and I'd love to see it. It's going to be a fun one.